Welcome back to the multiple choice question segment of audit sampling. This is part two, where we tackle the remaining 25 items out of a 55 item multiple choice question discussion format. So, again, these questions are collated from different sources, different review materials, textbooks, and the like, and the answers we will be discussing are mainly suggested answers. So, let's start with the very first question that we have, which is which of the following statements best describes the concept of sampling risk? We then recall that if we talk about sampling risk, this is the risk born out of drawing a sample that is not representative of the population. We also recall that when you talk about a representative sample, this means that the sample looks like the population. And so, therefore, if you're able to chance upon a sample that does not look like the population, well, our decision will be inappropriate or incorrect because we will base our decision on the sample because it is only the sample that we get to see, right? So, anything that is not related to the sample is considered as non sampling risk. So, if we evaluate the choices that we have, letter A would say, an auditor may fail to recognize errors in the documents examined for the chosen sample, meaning to say it is already possible for the sample to be a representative. It already contains the errors, but the auditor still was not able to recognize the error. So this is now a deficiency, or what is lacking is on the auditor side, not on the sample side. So letter A is non-sampling risk. Letter B, a randomly chosen sample may not be representative of the population as a whole on the characteristic of interest, and as what we have mentioned, sampling risk is the risk of drawing a non-representative sample. So for this, the answer is bravo. Next question. The diagram below depicts the auditor's estimated deviation rate compared with the tolerable rate, and also depicts the true population deviation rate compared with the tolerable rate. In which of the situations would the auditor have properly concluded that control risk is at or below the planned assessed level? So for this question, we are asked for the quadrant wherein the auditor's decision based on the sample is correct. Okay, so this is the quadrant that represents a representative sample when the sample looks like the population. And in this case, we are told the auditor has properly concluded that control risk is at or below the planned assessed level. If control risk is at or below, that means control risk is assessed as low. That means the auditor intends to rely on the controls. So if the auditor intends to rely on the controls, then that will happen if the deviation rate, let's pull out the highlighter, if the deviation rate is less than the tolerable rate, right? So if the deviation rate does not breach the tolerable rate, then that means the auditor will conclude based on the sample that controls are reliable. Now, correctly or properly concluded, meaning to say, this is also what we get to see in the population had we tested the population, that the deviation rate is less than the tolerable rate. So this is an example of a representative sample, and it is found, of course, in the fourth quadrant. Why did it go to the? It's found in the fourth quadrant. Sorry. So therefore, the answer to this is delta quadrant number 4. Known error. What is known error? So it's error that is known. It is error that the auditor has seen for themselves, right? So known error is letter A, the misstatements located in the sampling units tested. Or letter B, the projected number of control errors for the population. Or letter C, the auditor's estimate of the total population misstatement. Or delta, the number of control errors found in the sample. So we're referring to the known or the factual error. So if it's known or factual, then it cannot be bravo, projected number, because projection is not the actual or the known, right? If you have recalled our previous discussion, so we actually use the sample results as a base point to estimate the total population error or deviation. And it cannot be Charlie as well because it talks about an estimate. So it cannot be projected, it can't be an estimate because we're talking about known. So we're left with alpha, misstatements located in the sampling units tested, or delta, the number of control errors found in the sample. And we are a bit torn because both actually represented an actual factual case that the auditor has seen. So which one is more representative or appropriate of a known error? The answer answer is alpha. So when we talk about known error, while error is a generic term to include both misstatements and deviations, but in the case of referring to it as the known error, then it is more reflective of the misstatements found in the actual sampling units tested. So that is alpha. We also get to recall that the number of control deviations do not exactly equal to the number of misstatements. Meaning to say, it is possible for a deviation to occur, but no misstatement is associated with it. So between a deviation and a misstatement, the misstatement is more factual. That's why the answer to this is alpha. Next, we talk about variable sampling plan. Variable sampling would, of course, refer to substantive testing. So, therefore, it will refer to letter A, monetary balances, letter B, assessing the effective operation of controls, letter C, rates of deviation, or delta, the risk of assessing control risk too high. I think you would already notice Bravo, Charlie, and Delta all refer to attribute sampling or test of controls. So, variable sampling here is alpha. Next, an underlying feature of random-based selection of items is that each, so we're performing or we're looking at random selection, each letter A item in the accounting population should have an opportunity to be selected, or B, item in the accounting population be randomly ordered, or C, items must be systematically selected using replacement, or delta, stratum of the accounting population be given equal representation in the sample. So in this case, if we talk about random selection, of course, every single item in the population should have an opportunity to be selected. This is one of the reasons why when we look at the population that we intend to use, the population must be determined to be relatively complete. Otherwise, if the population is incomplete, the items which are not included in the population will not have any chance of being selected. So at the the cornerstone of random selection is that each item should have an opportunity to be selected. If you take a look at letter B, if the accounting population is randomly ordered, this will actually present quite a challenge to the auditor if the auditor performs random selection. That items must be systematically selected will be, of course, appropriate in terms of systematic selection and not the simple random selection that we have. In terms of the stratum, perhaps the auditor is considering using stratification. Actually, when the auditor stratifies, it does not necessarily mean that each stratum is given an equal representation, because then the auditor will have to determine a sample size relevant to each particular stratum, and the sample size does not necessarily have to be equal. Okay, so the answer to this is alpha. Next, we talk about the tolerable rate of deviations for a test of control. So, tolerable rate of deviation is that rate of deviation that you are willing to accept and still conclude that the controls are reliable. So, tolerable rate of deviation is generally letter A, higher than the expected rate of errors. Say, for example, you're willing to tolerate 10% and your expected rate of error is 2%. Okay, or is it identical to the expected rate of error? Or is it lower, meaning to say your tolerable rate is 5% and the expected rate is 10%? Or is it unrelated to to the expected rate of error? So recall a while back, we did mention something similar to this in part 1 of our MCQs, that the tolerable deviation rate must always be higher than the expected. Otherwise, if the expected has already breached your tolerable even before testing, then there would be no need for you to test the controls. You will just perform substantive testing, right? So alpha, tolerable rate, is generally higher than the expected rate to necessitate the performance of test of controls. Next, which of the following statements is true? So we're looking for the true statement. Letter A would say statistical sampling provides a technique for exactly defining materiality. But then we recall in module 2, or not in module 2, but in our previous discussion on audit planning, that materiality is actually a product of the auditor's judgment. So while the auditor uses benchmarks to determine materiality, the auditor will have to look at both the value or the amount and the nature of, to determine materiality. So sampling does not provide that technique. No, this is a matter of professional judgment. Letter B, statistical sampling provides a technique for eliminating judgment in testing. And this is where we recall that both statistical and non statistical actually make use of judgment. It's just that judgment is more pronounced or more widely used in non statistical. But it does not mean that it is not used in statistical. Because at the end of the day, the auditor has to make a judgment as to whether the financial statements are fairly stated or not, okay, as to whether a particular account is misstated or not, and that is still a product of auditor's judgment. So therefore, even when you perform statistical sampling, judgment is still present. So letter B is also not a true statement. Statement C, statistical sampling provides a technique for greatly reducing the extent of substantive testing. But then we recall deciding the extent of substantive testing is going to be based on our application of the audit risk model, right? Inherent risk times control risk times detection risk. So the extent of substantive testing is determined by the results of our risk assessment. Okay. Also, well, in practice and generally, we do get to see that in terms of statistical sampling, it does provide for generally, usually, a larger sample size. That is why statistical sampling is seen to be more costly than non-statistical sampling. So letter C is also not true. That must mean letter D is true. Statistical sampling provides a technique for measuring, I apologize, that should be measuring the sufficiency of evidential matter. And we recall that the only competitive edge of statistical sampling is that it allows you to state sampling risk quantitatively. So when the auditor uses non-statistical sampling, the auditor will refer to ARO and ARIA, acceptable risk of over reliance and acceptable risk of incorrect acceptance, as either high, moderate, or low. But when the auditor uses statistical, the auditor will assign a percentage to ARO and ARIA. That's the only competitive edge of statistical sampling. So in this case, the true statement is delta. Next, which of the following statistical sampling plans does not use the fixed sample size for test of controls? One of the two special types of sampling for test of controls. The first one, of course, is discovery sampling, which we normally use when there are indications or suspicions of fraud. The other one is stop or go sampling, where there is no fixed sample size and the auditor samples by tranche or by set. And after evaluating the results of the first set, the auditor will then decide whether to stop or to go. So stop or go sampling is also called sequential sampling. Don't confuse it with systematic, as they are both S, but stop or go is sequential sampling. So that should be Charlie for this number. Next, an auditor plans to examine a sample of 20 purchase orders for proper approvals as prescribed by the client's control procedures. One of the purchase orders in the chosen sample of 20 cannot be found, and the auditor is unable to use alternative procedures. So, if you would remember, we are saying that in the case of missing documents where no alternative procedure can be done, then this is normally considered as a deviation for purposes of testing. So if we're going to evaluate our choices, letter A says consider this test of control invalid and proceed with substantive tests since internal control cannot be relied on. But again, this is only one item and we are not performing discovery sampling. It's not mentioned that we're performing discovery sampling, so we cannot automatically invalidate, the entire or conclude that the entire controls are not reliable. Letter B, select a completely new set of 20 purchase orders just because you can't find one, or treat the missing purchase order as a deviation. So finally, this is our answer, right? Treat the missing purchase order as a deviation for the purpose of evaluating the sample. We again take note that no alternative procedure was performed. Which of the following statements is correct about statistical sampling? Letter A, an assumption of probability proportional to size sampling is that the underlying accounting information be distributed normally. And actually, letter A is not a correct statement. If you can imagine or recall a normal distribution, your bell-shaped curve. Apologies, I know that's not a very pretty bell-shaped curve, but the idea of normal distribution is that there are a few items with very small balances and also a few items with very large balances, and majority of the items are concentrated here in the mean. That is in the case of normal distribution. I am so sorry for the drawing. It doesn't make sense, but erasing it right now. So that's normal distribution. But if you talk about probability proportional to size sampling, probability proportional to size assumes that there are large balances, right? It's a test for overstatement. So if you can imagine, for example, I'm so sorry, a graph, and if we're going to graph the distribution for PPS, then the assumption of the auditor is that there are a lot of large balances. Okay, or if I may erase that, I'm so sorry, it would look something like this. Assuming that's a straight line, okay? I'm just using a mouse to draw, so forgive me. So under probability proportional to size sampling, then the distribution would be something like that. Okay, meaning to say there are many large values. The large values are represented by this area. Okay, so it's not normal distribution if the auditor uses probability proportional to size sampling. Again, accounting is an art. I'm so sorry, that does not look too pretty. I'm going to erase it now. So letter A is not correct. Letter B, zero balances in the population usually do not require special consideration when using probability proportional to size sampling. And to that, we say that is not true. Probability proportional to size means the larger the balance, the bigger the chance of being selected. Meaning, if the balance is zero, then there's also a zero chance of being selected. Okay, what if the misstatement is in the zero balances? Or if the balances are negative, there will be a negative chance of being selected. What if the misstatements are in the negative balances, right? So letter B is not true because it does require special consideration. Letter C, a classical variable sample needs to include negative balances in the sample. Okay, classical variable sample means to say not using PPS, assuming there's a normal distribution, those things. Or letter D, an estimate of the population standard deviation is required to use classical variable sampling. And actually, the true statement is delta. We need an estimate of the standard deviation. We need to determine if the population is highly variable or not, okay, because a classical variable sampling would use or would need to know what is the anticipated or expected distribution of the data. Is it normally distributed or is there some other type of distribution? Okay, in order to draw out the or in order to determine the sample size and draw out the sampling units. Now, letter C says it needs to include. It does not need to include. The idea is that it will naturally result to all sampling units having an equal chance of being selected, whether positive, negative, zero balances. It does not need, it is not forced to include. It will be included naturally, okay, by virtue of the sample selection techniques, or it's expected, to be included naturally. But then, of course, we know we can only hope and dream for a representative sample. There is currently no specific sample selection technique that would assure us of a representative sample, right? We know the limitations of sampling. But anyway, for this question, the answer is delta. Next, if the auditor is concerned that a population may contain exceptions, the determination of a sample size sufficient to include at least one such exception, do you remember this one? That all you need is to see even just one deviation, and you could already judge the entire population as unreliable. This is, of course, discovery sampling, which we use sparingly, okay, only when there are instances of or suspicions of fraud. Moving on to the next question, the risk of incorrect acceptance and the likelihood of assessing control risk too low. So this is our area, right? This represents area, acceptable risk of incorrect acceptance, and ARO, acceptable risk of over-reliance. This would, of course, refer to or affect the effectiveness of the audit because these are type 2 risks. So bravo for this number. Next question. Which of the following sample planning factors would influence the sample size in terms of substantive test of details for a specific account? Expected amount of misstatements by the fact that it is the expected or estimated population misstatement. We know this to have a direct relationship to sample size, so yes to that. Measure of tolerable misstatement, tolerable, just like your acceptable risks, this would have an inverse relationship to your sample size. So therefore, yes and yes. So that's alpha. Next, which of the following should be considered by the auditor in deciding which means or combination of means to use in selecting items for testing? Should we consider the risk of material misstatement related to the assertion being tested? And should we consider audit efficiency as well? Of course, the answer to this is both 1 and 2. Recalling, of course, the use of our audit risk model, where the risk of material misstatement or the assessed level of RMM has or definitely will be considered when the auditor determines what is the acceptable level of detection risk and the acceptable level of detection risk affecting the nature, timing, and extent. So that would be both 1 and 2. Next, oh wait, let's go back to that. You may be wondering why audit efficiency? Wouldn't shouldn't this be audit effectiveness as well? Well, of course, we do have to consider audit effectiveness or the type 2, no, the controlling the type 2 risks. But in the case of audit efficiency, do you recall our previous discussion on audit evidence where we said that cost is an important consideration in terms of deciding on the extent of testing? It is an important consideration because at the end of the day, we do need to finish the audit with the least impact on our resources. It is an important consideration, but the mere cost or difficulty does not in itself provide a valid basis to omit a procedure, particularly if there are no alternative procedures that may be performed. But we do consider cost. And by considering cost, that means we are considering as well utilization of resources, ergo audit efficiency. So alpha, both 1 and 2. Next, the expected deviation rate of client billing errors is 3%. The auditor has established a tolerable rate of 5%. So you're willing to accept deviations up to 5%, and what you expect is 3%. That means, yeah, we could perform the test of controls, right? Because the estimated has not yet breached your tolerable. In the review of client invoices, the auditor should use attribute sampling, variable sampling, stratified sampling, or discovery sampling. Because we're performing tests of controls, then we should be using an attribute sampling plan. So attribute sampling, letter A. Speaking of attribute sampling, in attribute sampling, a 5% change in which of the following factors normally will have the least effect on the size of a statistical sample? We know tolerable deviation rate has an inverse relationship. The risk of assessing control risk too low or the risk of over-reliance, your ARO, your acceptable risk of over-reliance, will of course also have an inverse relationship. The expected deviation rate expected will have a direct relationship. It is the population size that has a negligible effect. So the answer is delta. Next, when assessing the tolerable rate, the auditor should consider that while deviations from control procedures increase the risk of material misstatement, such deviations do not necessarily result in errors, right? This is what we mentioned a while back. That when we talk about deviations, just because there is a deviation does not automatically mean there is a misstatement. It is possible for deviations to occur, but then it does not yield to a misstatement. It is possible. This explains why, letter A recorded disbursement that does not show evidence of required approval may nevertheless be a transaction that is properly authorized and recorded, right? So it is possible that there was a legitimate transaction, it's correctly recorded. It's just that the document that you are examining did not bear the necessary indications of approval. You did not see anybody sign approved, okay? But it could still be a legitimate transaction. Or letter B, a recorded disbursement that is properly authorized may nevertheless be a transaction that contains a material error. So letter B is kind of like the opposite of letter A. So there is a disbursement bearing all of the required signatories for approval, but then it might actually result to a material error. Letter C, deviations from pertinent control procedures at a given rate ordinarily would be expected to result in errors at a higher rate, but actually letter C is not true, right? Because not all deviations would result to misstatement, so not ordinarily expected to behave this way. Or deviations would result in errors in the accounting records only if the deviations and errors occurred on different transactions, but we know that the accounts are interrelated. So even if these are on same or different transactions, it might still yield to errors. Okay, it might not. So therefore, we are sure at this point it's neither Charlie nor Delta. So our choices are between alpha and bravo. So again, we are saying deviations increase the risk of misstatement, but they do not necessarily result in error. So let's look for the choice that shows a deviation but not an error. And we will see that choice in letter A. Because letter B is an example of no deviation but with misstatement. Letter A is deviation with no misstatement. So that is what we're looking for. So alpha for this number. Which of the following is true regarding PPS, and what is PPS? That's probability proportional to size sampling. Letter A, typically a PPS sample includes numerous errors. Letter B, PPS results in a conclusion regarding the rate of error. But then PPS utilizes the peso amount, no, or the dollar amount as a sampling unit. Letter C, the risk of incorrect acceptance is incorporated into the sampling plan through the reliability factors. Or delta, the audit tests individual dollars within logical units of the population. And we know the answer to this one to be Charlie, right? We always consider the acceptable risk of incorrect acceptance. Actually, probability proportional to size sampling is ordinarily used by the auditor when the auditor anticipates few errors, because PPS, or probability proportional to size sampling, results in high misstatement bounds. It's very sensitive to the misstatements, so that the auditor should only use this one if the auditor anticipates few errors. Okay, and in the case of PPS, the result is actually in terms of monetary misstatement rather than the rate of error. And in the case of letter D, while PPS uses as a sampling unit the peso amount, no, or the dollar amount in this case, the auditor would still test the balance to which that peso amount belongs to. Okay, so it's not testing the individual dollars. The individual dollars or peso just become the sampling unit, but once chosen, it's the entire balance that becomes part of the sample. So the answer to this is Charlie. Next, an auditor is testing internal control procedures that are evidenced on an entity's vouchers by matching random numbers with voucher numbers. Now, if a random number matches the number of a voided voucher, so I think this is a repeat question, but still, we recall if it lands on a voided voucher, we first determine if the voiding is legitimate and approved. If yes, then we replace it. If, however, upon investigation we found out that it was not properly voided or that the voiding was not legitimate nor authorized, then it will be treated as a deviation. Because this question says it is to be replaced, that means that it has been determined to be properly voided. A repeat question for part one. In assessing sampling risk, the risk of incorrect rejection, and the risk of assessing control risk too high. If you assess control risk as high, that means you didn't rely on the controls when in fact you could have relied on it. And because you did not rely on the reliable controls, you ended up testing more in terms of substantive and taking a long time to finish your audit. So this one affects the efficiency of the audit. So that will be delta for this number. Let's take a look at this one. An auditor established a 180,000 tolerable misstatement. So tolerable misstatement, 180,000 for an asset with an account balance of 3 million. So the book value, population book value is 3 million. The auditor selected a sample of every 20th item from the population, forgive the typo error. So every 20th item from the population. So that means the auditor uses a systematic selection, okay, that represented the asset account balance and discovered a net overstatement of 10,500, as there are 1,100 pesos in overstatements and 600 pesos in terms of understatements. Under these circumstances, the auditor most likely would conclude that letter A, the asset account is fairly stated because the total projected misstatement is less than the tolerable misstatement. Or letter B, there is an unacceptably high risk. I repeat, there is an unacceptably high risk. I just had to fix the typo errors there. That the tolerable misstatement is more than the sum of the actual overstatements and understatements. Or Charlie, there is an unacceptably high risk that the actual misstatements in the population exceed the tolerable misstatement because the total projected misstatement exceeds the tolerable misstatement. Or Delta, the asset account is fairly stated because the tolerable misstatement exceeds the net of the projected actual overstatements and understatements. We do get to notice that the known misstatement or the factual misstatement is a net overstatement of 10,500. But we also understand that the 10,500 overstatement only refers to the sample. And we are going to make a conclusion based on the entire population. Ergo, we do need to project this misstatement, or in this case, this overstatement. And if you would notice our choices, they all invoke, or not all, but most of them invoke the projected misstatement. So how do we project the misstatement in this case? So take note that we have 10,500 as the net overstatement, but because the auditor uses every 20th item from the population, that means for every 20th item, there is a 10,500 overstatement. That means to project, we will have your 10,500. So 10,500 again. I'm using a mouse, so forgive me. So 10,000, it's quite difficult to write using a mouse. So 10,500 multiplied by every 20th item. So for every 20 items, there will be a misstatement of 10,500. Ergo, in this case, our projected misstatement is 10,500 times 20. That should be 210,000. So projected misstatement is 210,000 versus your tolerable misstatement of only 180. So as we are going to compare the tolerable versus, I mean the projected versus the tolerable, then we would see that there is an unacceptably high risk that the actual misstatements may exceed the tolerable misstatement because the total projected exceeds already the tolerable. So there is a high, an acceptably high risk that had we tested the entire population, then we would have seen that the entire population is materially misstated. So that would be Charlie for question number 50. Next, which of the following best describes sampling risk? And again, sampling risk is the risk that the sample is not representative of the population. I think this is another repeat question from part 1. So the answer to this should be Charlie. Next question, which of the following sampling methods would be used to estimate a numeral measurement of a population such as a peso value? So if you're talking about a peso value, more appropriate for substantive testing, and if it's substantive testing, then variable sampling is the way to go. I again apologize. The answer should be variable sampling. Let me just fix that real quick. So there you have it. The answer is variable sampling because you're talking about the peso value. Next question, in which of the following cases would the auditor most likely examine 100% of the items in the population rather than utilize sampling? Now, there are certain instances or circumstances where 100% testing will be more appropriate. Which of these four is that circumstance? Letter A would say the amount of dollar misstatement is expected to be high and tolerable misstatement is low. So, assuming, for example, that the expected misstatement is 10,000 and you're only willing to tolerate up to 500. So in that case, do not perform sampling. You test the entire population. Okay, so for the auditor to utilize sampling, the tolerable should generally be lower than the expected. So that's why the answer to this is alpha. Next, the sample size of a test of controls varies inversely with. We know if it's tolerable, it's inverse, but if it's expected, it's direct. So therefore, there should be no and yes. I mean, yes, inversely, yes and no. So yes and no, that should be alpha. And if I'm not mistaken, this must be the last question. A number of factors influence the sample size for a substantive test of details of an account balance. All other factors being equal, which of the following would lead to a larger sample size? So we're looking for the factor that would result to a larger sample size. Letter A, smaller expected frequency. Expected has a direct relationship. So if the expected is smaller, then the sample size will also be smaller, not larger. Smaller measure of tolerable misstatement. Tolerable misstatement has an inverse relationship. So a smaller measure of tolerable misstatement would yield to a larger sample size. So it should be Bravo, right? When there is greater reliance on internal controls, we are talking on substantive tests of details. So the more you would like to rely on the controls, the lesser will be your substantive testing. In terms of greater reliance on analytics, provided the analytics is performed for the same objective and for as long as there are no red flags or unusual results coming from the analytics, then it would also yield to a smaller sample size. So of the four, the only one that will lead to a larger sample size is a smaller measure of tolerable misstatement. So that's it. I think that's our 55 items. Before I go to my official thank you slide, I'd like to apologize for the typo errors that we have seen all throughout and sometimes, the incorrect animations. But yeah, rest assured that that will not happen again. I hope. I hope. But thank you so much for joining me for our 55 multiple choice questions here in Audit Sampling. I hope to see you for the rest of our next videos. So thank you so much everyone and may God bless you and your dreams.